Hi everyone, myself Prithvi. Today I welcome you all for a fundamental analysis of a company called Adani Ports. Adani Ports is one of the largest commercial port operators in India, with having a 1/4 of the cargo movement which has been done in India, with having a 12 domestic ports across all the states of India. So why I have taken Adani Ports for my fundamental analysis in this video is mainly because the economy is expected to grow at 10 to 12% in the next two years. If that has to happen, the import and export segment and the logistics segment plays a very important role to do that. So the Adani Ports in the segment of ports and logistics, which occupies a market share of 24%. So if the Adani Ports plays a very important role in the economic activity, means the positive impact on the revenues and the profitability will be impacted positively because of the economic activities. So that's the reason I have taken Adani Ports for my fundamental analysis in this video. So please watch this video till the end to get to know how does the Adani Ports stand at the current valuation. Press that like button if you like this video. So in the fundamental analysis I'll be discussing in this video is all about, first one, the business of the company, next the history of a company, shareholding pattern of a company, the economic analysis and the industry analysis, financial statement and the financial ratios. Next is the conclusion about the company. First, let us start with the business of the company. In the business, the company business is mainly divided into three parts. First one is the port and terminal business, second one is the logistic business, third one is dredging business. So before going to the ports and business cycles, I want to explain you how the business is going to be done by the Adani Ports. So I have taken an example of a Dharma plant, where in the Dharma plants the customer has a Tata Steel. In the Dharma plants, the coking coal will be imported, that will be stored in the warehouse and taken by the rail, and it sends to the Tata Steel. In the Tata Steel, the processing will be done and the final finished product of a steel will be produced, that is been taken by the rail and stored in the warehouse and exported to the exporter. So this is how the supply chain of Adani Ports works. In this supply chain, the Adani Ports divided into the two segments. First one is a port segment, second one is a logistics segment. First, let us focus on the port segment. So in the port segment, they are having a capacity of 490 million metric tons, with having a west coast, they are having a capacity of 327 million metric tons. In the east coast, they are having a capacity of 160 million metric tons. So they operate with the 12 strategical located ports in across the coastal regions of India. So in the west coast, the major port is the Mundra port. In the east coast, the major port is the Krishnapatnam port. So these are the two ports which is contributing almost a 60% of the capacity. So presently they are having a 490 million metric tons. When it was in the 2006, they were having a one port with a capacity of 10 million metric tons. They have come across with the 12 ports in the 21 with a capacity of 400 million metric tons. Coming to the logistics, in the 2007 they were having a one logistic park, and now they are having a 5 logistic parks. Coming to the train they were having in the 2007 was 6, that has been increased to 60. So in the FY20 they have made a cargo movement of 223 million metric tons. It's with respect to the cargo. So it is an almost of increase of 7% year on year. So this is all about the port business of Adani Ports. Next, let us focus on the logistic business. In the logistic business, they are having a 5 logistic parts across India. The firstly starting from Kanche in Punjab and Kaliraipur in the Punjab, and Patli and Kishangarh and Malur in the south. So these are the logistic areas where they are having presence. The service and the capacity which they operate with is, they are having a 60 rail capacity in the logistics segment, and 4 lakh square feet of warehouses, and 5,000 plus containers, and 0.9 million metric tons of grain soils, and they are having another 6 inland waterways vessels. They offer a end-to-end service. They operate in logistic parts with a capacity of 5 lakh TEU. 5 lakh TEU stands for 20-foot equivalent unit. What does it tells means that it's a specification of the length and the breadth and the tall of a container. So that is been represented by a TEU. The capacity of the logistic parts is almost 5 lakh TEU, and they operate with the logistic service. They have been provided in the auto logistics. They are having a capacity of 20,000 car storage capacity. They operate in the inland waterways with a capacity of 6 inland vessels and with the capacity of 64 to 68 TEU, and they operate with the rail operations with the 60 rails and 43 are the container rails. Next, they also operate with the warehouses services. Presently, they are having a 4 lakh square feet of capacity. Next, they are also producing a agri logistics. They are producing import and export of agri products from one part to the another parts. So these are all the services which they are being in the logistics segment. So next, let us focus on the other segments, which is about the dredging business. So before getting into the dredging business, I want to make you understand what is a dredging. Dredging means removing unwanted things from underground of a water and a lake with the boats or the special device. So this is called as a dredging. So why the dredging will be done? Dredging will be done mainly when they are constructing in ports and they want to construct a dam or to a coastal defense operations. Their dredging will play a very important role. The dredging operations will be done based on the project and the project objective. So Adani Ports is having a 23 dredgers. They are the largest capital dredgers capacity in India. So that's one of the very good positive point with respect to the dredging business. They are the leading and the largest dredging business in India. So this is all about the business, what they are into of Adani Ports. Next, I would like to talk about the history of Adani Ports. The Adani Ports is an arm of Adani Group, which has started way back at 1998. Now they are becoming the largest commercial port operators in India. The company business has been divided into ports, logistic and special economic zones, with having an installed capacity of 490 million metric tons. In the FY20, they have been delivered 223 million metric tons. They have been handled a cargo. The one which they have is that the largest Mundra plant, which occupies almost 15% share in the cargo movement of overall India. The company is also interested and integrated in the logistic unit. They currently operate with the 10 domestical ports in all over the India. The Adani Ports has been reported a revenue of 11,873 crores in the FY20. So this is all about the history of Adani Ports. So next, let us focus on the shareholding pattern of Adani Ports. In the shareholding pattern, the promoter holds 63.74%. So the one negative thing which I found in the shareholding pattern is that they have been pledged almost 38.15% of the promoter holding in the bank. So that's one of the negative point with respect to the company's shareholding pattern. The one key positive things which I have found out in the shareholding pattern is that the FIIs hold 17.75% in the Adani Ports and DIIs holds 15.75% in the Adani Ports, but public hold only 2.76%. The public holds lesser than very lesser when compared to the FIIs and DIIs. The most of the companies which I was doing a fundamental analysis where I was finding that shareholding pattern, the public's shareholding will be minimum 4 to 6%, which I have found out in many very good companies. But when it respect to the Adani Ports, the shareholding pattern stood at 2.76% of public. So this shows the FIIs and DIIs, the focusing on the futures prospects of the companies is very good. That's the reason they are been investing in this company heavily. So this is all about the shareholding pattern of a Adani Ports. So next, let us focus on the economy and the industry analysis. In the FY20, India has operated and India has handled a cargo movement of 704.82 million metric tons cargo traffic, and it is having a CAGR of 2.47% from 2016 to 2020. The cargo traffic in the non-major ports is stood at 447 million metric tons was the traffic which found in the non-major ports. So it's when you sum the total, the cargo handled by in India is 1151 million metric tons, which has been handled by India. So presently the India is having a capacity of 1514 metric tons per annum. So when it comes to the future road ahead, so in the future in India is expected to add a ports capacity from 5 to 6% in the next coming years. So this could add every year almost 275 to 325 million metric tons when it comes to the capacity of cargo movement in India. The Ministry of Shipping has been reported and targeted that it has to increase the capacity of 3130 by the end of 2020. So which includes the private participations plays a very important role to achieve this target, which has been told by Ministry of Shipping. So what is the future growth, what we can expect for the port segments is that the port segment, the cargo movement is expected to grow at 1695 million metric tons by FY21 and FY22. The National Transport Policy Committee has been reported that. So if that has to happen, present capacity what they are operating is 1150 million metric tons. So if it has to increase from 1150 million metric tons to 1695 million metric tons, it's almost a 500 million tons is the potential what they are having in the next 2 years. So what is the positive things for Adani Ports is that, so since they are the major players in the port segments, they occupy a 24% of the cargo movement, where in the 500 million metric tons to be reached in the next 2 years, which they occupy the 25% of it. If they occupy 25% of it, the revenues will go to multiply by 25% in the next 2 years. So that's the reason, the very key positive things which I have found out in the economic and industry analysis. So this is all about the economy and industry analysis. Next, let us focus on the financial statements of a company. So coming to the financial statements of a company, so this is an annual statement which I have taken on. So in the annual statement where you can find, so since from 2009 the company is reporting a revenue which has been increasingly year on year, but in the last 3 couple of years the revenues have been not raised. So the profitability of the companies was not raised. But one thing which we should focus on is that in the profit and loss account of the yearly, the interest what they were paying year on year, that is also increasing. Means when the interest is increasing means the debt, the borrowing of the companies are increasing, the debt of the companies is increasing. If that is the case, the company's liquidity ratio should be focused. So when it respect to the company, so the company is having a debt of 34,367 crores. So I have taken a quarterly analysis of a financial statement of a company. So from the March 2018, the revenues were not increasing quarter on quarter. So what we have found is that in the last 3 quarters, the company has witnessed a revenue growth which is almost of 25% revenue growth what we have seen from FY20 September to FY20 December. The quarter on quarter it has been increased almost 3,746 revenue compared to the 2,900 revenue. So the operating margins have been decreased when it compares to the quarter on quarter. The interest income what they have to pay, that has been significantly increasing from the last quarters. So when it compared to the December, the interest which has been paid was 467 crores. So significantly that has been increasing to 612 crores in the last December quarter. The profit after tax was reported in the December quarter was 2000 crores. So when it compared to the quarter of September, that has been well okay. So when it compared to the year on year, the profit is still increasing. That's one of the very big positive points with respect to the company. So the EPS is also increasing quarter on quarter when it compared to the last 3 quarters of the company. So next, let us focus on the balance sheet of the company. So in the balance sheet of the company's borrowing is significantly increasing from the last several years. So presently they are having a debt in their book of 34,367 crores. So when it compares to the FY20 March, they were having a 29,979 crores that has been increased to 34,367 crores. So this is one of the major negative point with respect to the company. So since the company futures are good, we need not to be scared about the debt what they are increasing in their books. So this is all about the financial statement of a company. The financial statements which looks good but only negative point which I found out in the company's financial statement is all about the debt what they are increasing in the several quarters and the several years. So one negative point with respect to the debt. Other than that, the company financial statement is very good. So next, let us focus on the financial ratios of Adani Ports. So when it comes to the Adani Ports financial ratios, presently the company is trading at a 679 rupees. So the debt to equity what they are having is 1.24. So it's slightly higher. So when it is more than 1, so we need to be slightly aware that the debt of the company is increasing. We should be focused about the balance sheet of the company, whether they are increasing year on year, quarter on quarter. That should be focused when you should be investing in the Adani Ports. So presently the debt to equity is 1.24. Please be focused on that. So the debt what they are having in the book was 34,367 crores. It's one of the big debt. Please focus on that. So the present PE of Adani Ports is 34.6. So the 5-year PE is 19.4. So when it compares to the 5-year PE average, the Adani Ports is trading at a high valuation. So I want to tell you why it is trading at a high valuation. So because of the economic activity is expected to grow at a 10 to 12%, the Adani Ports business is also expected to grow at a 25% in the next 2 years. So the expected growth has been witnessed and been gained by the market, and they have been witnessed that the Adani Ports will going to grow at a 25% in the next 2 years. That is the reason the reward has been rewarded today itself. In the next 2 years, we cannot expect the stock price movement to be more in the next 2 years, but the stock price will have to be consolidated when it is in the corrective space. When it has been corrected almost 10 to 20%, we could add these stocks when it is a fundamentally good stocks in the next futures are coming. So the return on equity is 15.2%. The operating margin stood at 59%. The operating cash flows, what I want to tell is that the operating cash flows reported in the FY20 was 7,402 crores. The free cash flow what they are having in the book is 3,780 crores. Since the free cash flows are increasing year on year, that's one of the very big positive points, since the operating cash flows also very good. So this is all about the financial statements of the company. So coming to the conclusion about the Adani Ports is that the Adani Ports, the current valuation seems to be higher, but we can expect in the future that the company's future is very good. In the future, the company is expected to grow at a 25% year on year when it respect to the revenue and the profit. The EPS is also expected to grow at the very big pace. So that's the reason the stock market has been rewarded Adani Ports today itself. That's the reason you could find that Adani Ports has been rallied from 375 to 780 levels. So the stock has been doubled in almost 3 months. So this is what is a surge has been happened in the Adani Ports. So that's the reason. Other than that, the stock valuation seems to be higher at the current time. In the next 2 years, the stock is expected to grow at 25% in the next 2 years. The stock price, when it comes to correction of the stock price, we can add our quantity by buying on dips. So this is my analysis about the company. Please do make your analysis about the company to take a call on this or not. So till next video, bye bye.